Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Monday, May the 2nd, 2016, and this is the Daily Report for Gold and Silver. After phenomenal gains on Friday and actually overseas taking gold well above 1300, high actually 1306 in overnight trading last night, we do have a round of profit taking place. Now we are off the lows. Lows are 1289.60 on the day, currently trading at 1282.40, putting it up about $2 from yesterday, however down about $4 from Friday's close. When we look at silver, silver is the precious white metal that is certainly taking it today in terms of a round of profit taking, off about 30 cents, trading at 17.51. Low on the day is 17.49, and the high $18 per ounce. We will be raising our stops today, and I will include that in a special trade alert, whether it's separate from the email that we send out, the email announcement letting you know that the video is up and live. We'll either include it in that or separately, but we will raise our stops on today's report. So traders, as I said, we absolutely are witnessing a round of profit taking in the precious metals markets, and we did have some considerable selling considering the fact that the dollar was under extreme pressure today. And we'll look at a dollar chart, a time permitting, but we still found it difficult to raise the price of gold. Now, we did have the market move above 1300 an ounce, trading to a high of 1306. You can see that high right up in here. And so we absolutely do want to raise our stops. And so the question is, what is a logical place to actually put our stops now that we're intent on raising them? And the first thing is that we're going to have to put it below this particular low, and that of course is the low on Friday. If we draw a line across like this, what you'll see is that does cover us for these recent highs, except for this one little blip up here, which came in about a week ago. And so my recommendation, of course, right now is to raise our stops, which are currently below 1223 to below 1267. Of course, we're in at 1256, and that in essence locks in any equity that we put behind the trade and protects us from taking any kind, sustaining any kind of a loss on the trade. And of course, it is our hope that we do see this market move over 1300. If I see more weakness come into the market, we might take the stop to the market and actually just take a profit. But for right now, my recommendation is to move our stop up to just below 1267. So, as I said earlier in the broadcast, we certainly saw some major pressure in the U.S. dollar. Take a look at this dollar chart. It's a daily chart, standard candlestick format. When you look at that, we identified, I believe, a pretty critical area in which the market really had to hold. It was based upon a couple of recent lows. And the fib retracement we were looking at, of course, started at roughly 94, moving up to 100 on the index. And the one thing that we can say without a question of a doubt is that when the market broke through this level on a technical basis, the dollar went into absolutely a free fall. And if you look at it over the last couple of days, you can certainly see that. Now, how does that relate to gold? Well, I've just brought in the Kitco Gold Index. Now, we're trading up a couple dollars, down a couple dollars today, but the one thing that you'll see is that the actual move to the downside would have been much greater had it not been due to a weakening U.S. dollar, which actually added about $6 of value to gold, but trading, profit taking, took the market down by about $8.30. And that's where we get this net change of up a couple dollars to down a couple dollars on the day. So traders, we are looking at silver. Silver under considerable pressure. And silver has been the kind of metal, because of the liquidity in the market, or I should say lack of liquidity, meaning it's a much thinner market, you're going to have much broader moves to the upside, much greater moves to the upside, I should say, as well as more severe sell-offs when the market's under pressure, such as we're getting today. Now, you've got silver down about 1.5% And when you compare it to gold, of course, gold is actually trading up 0.2% on the day. So we've got silver under pressure and we have gold trading higher on the day. So in terms of looking for an appropriate place for our stop, we have to look at some of these recent highs and lows. Now, the market's much too close, of course, to these highs right here, which are sitting roughly in the same area as these current lows are. Let's draw a line across and you'll see what I mean. So we're sitting right here, so this makes absolutely no sense. So the next real level that we could look at would be this particular open in the market, which comes in roughly at 1707. And my sense is if silver holds, which I believe it has a really decent opportunity to, it should hold to a degree above this particular level here at about 1750. So traders, go ahead and move your stops up in silver to below 1707, moving your stops up below 1267 in gold. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.